Let's do some Top That Trade. Our players, Alan Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business Network News contributor, are ready to go. Round number one, guys. Done. Rally run. Retirement money will be pouring into the stock market. But just how vulnerable is the rally?
Well, stocks are always vulnerable, especially after the epic run we've had for profit taking. So as a trader, it's important to see how the markets react, not how they necessarily act. But yeah, a 5% pullback can happen at any time, anywhere, for any reason. But the takeaway I get about all the retirements is just a reminder that we've had 1,000 people retire a day for years and years and years. That adds up to about 3 million. That's why the workforce is what it is. So jobs are still very, very positive for the economy. So I'm going to say positive for the economy. And if there's any pause in hiring, the positive would be that would accelerate the rate cuts, because we're not raising rates, we're only cutting. It's just a matter of when.
And we're going to have to get a lot more people working in this country to pay for all the people that are retiring,
Right.
So because it's going to be a big bill in the future. But when you talk about the stock market, we keep talking about the Magnificent Seven, kind of an interesting development. Everybody was worried about NVDA. It was an all-time high. And, everybody thought, oh, my gosh, it's and then, of course, it crashed almost 10% before the earnings because everybody was freaking out. What a great buying opportunity. It reminds me of Alan's favorite stock back in the old days, Apple, right? It used to be the same thing. Oh, Apple's can't keep going up. And then before earnings, they would tank it. And every time when the earnings beat, it made new highs. I thought it was a very good sign for the overall market. Good sign, too, that AI is continuing to drive this market and probably will for the next decade to come.
Round number two, pork, coffee, or cocoa apocalypse. Which commodity meltdown would you run to for a trade?
Well, I think I'm more worried about a melt up. In fact, I like to melt chocolate in my coffee, very rarely, but I like to if I could. But I can't afford it, right? Cocoa is at new all-time highs when adjusted for inflation. And it's very interesting to watch a market like cocoa because when it gets in uncharted territory like this, it may not be over. It might not even be close to over. Even though we've seen this meteoric rise, when you get to these levels, you could see the price of cocoa go through the roof. So if you're a chocolate lover, you might want to load up right now, even if you think prices are high, because we think cocoa has the potential to double in price, even at these record high levels.
Well, we've already doubled in price. Now, you're talking about commodity, and commodities are purely supply and demand. A commodity that's got limited, it's grown in essentially 3 countries. Something like an orange juice. Orange juice has only grown in a couple of countries. Orange juice isn't a real liquid contract, but orange juice has gone from $1 to $4. So it's an example of the price pop potential in commodities when there's that supply issue. Look at cotton. Cotton's at about $1 right now. The highs in cotton are $2. So anything that happens in that market, we could see that move. There's always the opportunity in commodities.
Wait. I got to call out Alan. Orange juice is liquid. It's when it's frozen concentrated that it isn't.
I knew that was coming. I knew it.
Round number 3, profit growers. 8 companies are expected to outgrow NVIDIA. Pick a profit grower.
Well, I think there are so many that right now to pay attention, because the Magnificent Seven is just 7 stocks. That means there's 490 other stocks in the S&P that have lagged behind. So if you look at the PEs of the Magnificent Seven, they're still relatively reasonable, but the PEs on all the others, they're going to be better values in the long term if they're continuing to produce profits like we've seen. So I like the laggards. That's the game I like to play. But wow, these stocks are strong.
I think over time, he's right. The laggards are going to really start to catch up, mainly because of the Magnificent Seven. The technologies that they're delivering really are going to filter down to the rest of the stock market. They're going to become more efficient. That's going to get those stocks going eventually. But these are definitely going to be the leaders for some time. But if you look at earnings per share, I got to go back to commodities. Look at what's happening in the commodity space. Grain prices are low. Food prices are high. Orange juice at record highs. Cocoa. But if you look at the meat market, that's explosive right now. There's a real tight supply of meat. And when you have tight supplies, the companies that sell that or produce it, like Tyson, are probably going to outperform.
On to your bonus round question for today. During the past decade or so, which stock has appreciated the most? NVIDIA, Apple, or Monster Beverage?
I thought it was Celsius beverage. I thought it was Celsius if you look at the last decade. But, if that's not on the list, I'm going to go with the other drink.
I have to go with them as well because it came from such a low vantage point. And I personally have helped that stock because I used to drink a lot of that stuff.
It's water. It's water with stuff in it. What's the profit margin on water? A lot.
Stuff in it makes me feel a lot more awake. I'll tell you that.
I'm not going to get into the stuff.
You are both monster winners. Shares are up 200,000%. If you invested $1,000 in 94, it's now worth $2 million. Maybe you should think about buying the stock rather than drinking Monster.
That's probably a smart idea, especially because I think one can's like $3.
Go to businessfirstam.com for where to see our show on TV.